Welcome to the Mainstream Mortgages Podcast. I'm Derek Vandell, and I'm joined today with my partners in crime, Peter Paley and Colton Boudreau. Today is Friday, October 31st. Happy Halloween, guys.
Happy Halloween, Derek.
Big day.
You didn't dress up in your costumes. It's kind of disappointing, not gonna lie. I think our viewers are gonna be disappointed. Our one viewer
I
is
don't think my
probably.
mom's gonna care.
Yeah. I was gonna say Colton's mom is our one viewer, but yeah, it could be Peter's mom too.
Yeah,
Okay,
she
two
might care. I don't
viewers.
know.
All right. Well, sorry, Mrs. Paley and Mrs. Boudreau. We'll do better next time. So on today's episode, we're gonna get into a few more details on what we talked about in the first episode. Our first episode was on pre-approvals. We took a really high-level view and kind of glossed over a lot of things that I think we should dig into on today's episode because it could be important for the prospective new first-time home buyer, I should say, and could be very helpful for people looking to buy a home in the near future. So I want to prod Colton and Peter a bit here, and I'm going to start off with what Colton mentioned in the first episode. He was talking about how a pre-qualification is more of a vague, non-specific type of pre-approval compared to like a pre-approval that's fully underwritten using your documents and that kind of thing. So I want to hone in on this because I think a lot of people don't even understand that there's a difference between the two. And even when I talk to other mortgage professionals, sometimes they use the term pre-qualification and pre-approval interchangeably. So if I'm the borrower, Colton, I'm a first-time home buyer. I don't know the process at all. I was told that I need to get my mortgage a pre-approval. What would you say to me is the one key difference between a pre-qualification and a pre-approval?
So pre-qualification is, like you mentioned, it's vague, right? It's you inputting your income, how much down payment you have, and sometimes maybe even credit score, which is really vague if you're just looking online or you're through your banking app, right? Pre-approval is like we kind of mentioned on the previous episode, is where we'll get all your information, right? So we get your application, it states your assets, it states your date of birth, all of these little things about you. And then we get your documents, right? So your letter of employment. We'll check it, make sure you're salaried or whatever it might be hourly. If we have to call your employer, we do that to verify the information, and then we get your pay stub, right? And so when we're looking at your pay stub, are you on track for what your letter of employment states is your salary? Have you received a raise? Like, are the numbers a little skewed or off? We find the reasoning, and we just basically make sure we have all the required information that we need so those two documents align properly. And then we get your bank statements, of course. If there's any large deposits or transfers in or out, we ask you, we source those, and we confirm the amount of money that you need and that you have to move forward with the pre-approval process. And also, the most important step is checking your credit, right? Um, are your balances correct? Do you have any collections? Are there any outstanding debts that you're maybe not even aware of that are reporting on your bureau? If there are, we talk to you about it. We check it through thoroughly. If something needs to be fixed, like I mentioned previously, then we fix it, right? So everything is done up front. It's really thorough. We like to be thorough, but it's super important for you to know exactly what has to happen, and there's no issues along the process, right?
Okay, so if a fully underwritten pre-approval is so thorough and it's really important to be that thorough, Peter, why would a pre-qualification even exist? Who would want that?
Nobody wants it, but that's what a lot of people in this industry are offering at this time. And I think the main reason is it is the time invested to fully underwrite a pre-approval. The lenders don't want to do it because it's taking valuable time that might not result in a sale. And mortgage specialists at the banks, credit unions also maybe don't want to invest that time because they're being monitored for their sales, production goals, and what have you. So, um, for us as mortgage brokers, it's different. It's worth us to invest that time for to help the clients down the road. It helps build our reputation. It makes us better mortgage professionals, like with lending policy and trying to make this like the deal work. And it also is really great when we write a pre-approval letter for one of our clients. The realtors on both sides of the transaction usually know the amount of effort that we put into a pre-approval. And I think the trust level for a mainstream mortgages pre-approval is a lot higher than any of the major banks or some of the credit unions, because they've known we've verified the income, we've verified the down payment funds, we've checked the credit. If there's any issues on the credit bureau or something misreporting, we take the step and pay the money to get that corrected for the client. So really, all we need to do for our pre-approval is make sure that the property passes all the standards out for the property, right? So the lender has to like the property, and if the mortgage is going to be insured by CMHC or Sagen or Canada Guarantee, that they also like the property and agree to the value or the purchase price. Like that's all that's left with us, and that little bit of work up front goes a long way, especially if you're in a competitive offer situation.
Okay, so if I come to Mainstream Mortgages as a borrower, I'm getting a really thorough job done on my pre-approval, and I can have some really good confidence in moving forward with a purchase. But what if I'm a borrower who's listening to you guys right now and I'm hearing these things, but I don't really want to kind of reach out to you guys because I'm happy with my bank. I've had a really good relationship with my big bank since I was a child. I've had a checking account with them. So, they're probably pretty loyal to me and I kind of want to return that loyalty, right? So if I was that borrower and I walked into my bank, what would I expect? What can I expect from my bank, do you think?
I'll jump
Um,
in.
okay.
Okay, so I worked at a major bank for the first 14 years of my career, and honestly, the pre-approval process there was we had your name, we had your income on file. We never really delved into any details, and a lot of times we didn't even check the credit score. It was like really just a rudimentary calculation to give you an amount. And back then it kind of worked. Like that was many years ago, but that it kind of worked because mortgage policy was a lot more forgiving towards the borrower. But now in today's age, we have anti-money laundering policy, we have politically exposed people policy. There's a there's a myriad of new mortgage policies that came out after the global financial recession that just makes us have to do more work up front. So a rudimentary calculation doesn't even count anymore, to be honest with you. What we can use as income, what we can use as down payment, what we can't. To there's so many different elements to the application now that like in my mind, being like a thorough and detail oriented person, i would I wouldn't even feel good about giving somebody a mortgage calculation. Like even our app, it's a great app and it'll pre-qualify you, but I mean it's not going to go into the detail that we would go into. And I always joke around the office that we do 142 pre-approval inspection, like kind of to mimic some of the auto body shops, right? And that's what's required in a mortgage application these days.
So if I walk into my bank, you're basically saying that I'm getting a pre-qualification, which is vague, instead of a full pre-approval. Colton, is it possible that I might walk into a bank or even a credit union and get a full pre-approval from them? Or do they only do pre-qualifications?
I would say it's possible for both. I know I went through a financial institution 5 years ago, strangely enough, for a pre-approval, and they did pull my credit and they did get the docs up front. So I think it really depends on the situation. It depends who you're working with. We've been finding a lot of situations where it has been a pre-qualification where clients were told that it is a pre-approval, and then there's issues down the road where when they pull the credit or they get the actual pay stub or whatever it might be, um, clients are having then a hard time qualifying for said home, or they're just running into major issues that we end up having to solve when they come into our door here. at Mainstream Mortgages. So I think it's really hit or miss, and you just want to be careful when people are throwing out the word pre-qualification or pre-approval, and you really want to ask those questions like, did you check my credit? Did you look over my documents, or did you even request the documents, right? Like that's a red flag in itself if the financial institution didn't even ask for your documents, because then you know it simply is a pre-qualification.
Right. Okay. So, um, like, let's say they ask for just the pay stub and that's it. Is that a pre-approval?
So I think it depends on the financial institution, right? Some places don't require like a letter of employment. They can just work off your pay stub and your T4s. So I would really say the more documents they ask you for, the better. The safer your pre-approval is going to be, or your pre-qualification, I guess, essentially. Um, which you might not want to hear, right? Giving up all the documents right away, but when it comes down to it, it's the safest route and the one where you're going to have the most clarity and have the correct numbers, essentially.
Right. And if I'm a borrower, maybe I'm not going to a bank or credit union, I want to go to a mortgage broker. Not necessarily you guys, but maybe I have a friend of a friend who I want to go to, give them the business. Um, is it possible for that mortgage broker to give me just a vague pre-qualification instead of a pre-approval?
It is. Yeah, it is. Again, it's just work up front, right? And maybe as a client, you tell them, yeah, I'm salary at 100,000 and I work for the government, and they're just like, good enough, right? What could go wrong? And really, a lot of things could go wrong, but some brokers and financial institutions obviously might just take the short route and say, we'll worry about it later, we'll figure it out later. Ran you through their app or just ran you through some vague numbers and off they go. And maybe it's good in the end, maybe problems arise, but it's just not the route we go here at Mainstream Mortgages.
Okay, so if I'm the borrower and I want to get a pre-approval from anyone, basically what you're saying is that I need to ask the right question. I shouldn't be asking for a pre-approval. I should be asking for what should I go into my bank and say?
Yeah, more questions the better, honestly. I always tell our clients this, especially as home buyers or first time home buyers, sorry. Um, no questions are dumb questions, right? Ask away, right? You want to be informed, you want to be educated on this big decision, on this big purchase. So even if we ask for the letter of employment and pay stubs and bank statements and all that stuff, like ask like why do you need this actually? And it's quickly outlined like we need to confirm this information. Um, to assess your situation and make sure we're confident and comfortable with what you can afford.
That is an interesting topic is why we need all the documents, right? A lot of the time we get clients asking us, why do you need this? Why do you need that? Well, I was at the bank and I did a mortgage pre-approval before and they didn't need all these documents. So what would you say to a borrower that doesn't quite understand why we need more documents than, say, the bank?
And I think to be fair, Derek, that the client needs to realize that we don't know them. Like they're really coming in off the street where they might have a 5, 10 year relationship with their bank. But don't forget, the bank knows everything about you, your previous address, your current address, where you worked, where you used to work, where your spouse works, where your spouse used to work. And they collect all this data. So they are um, 10 leaps ahead of where we would be as mortgage brokers just meeting you off the street. So not only do we have to get to know you, we trust you, of course, but we still need to verify all the information. And going back just to the previous point where um, the financial institution also needs to verify the information, but sometimes they trust what they see on their screen and that information's out of date. And that can lead to problems if they're relying on it for your pre-approval or pre-qualification and they don't get all the current and up-to-date documents. You go write an offer on a house and then all of a sudden you find out, oh, sorry, you're not actually pre-approved because someone at the bank relied on old information. So it's always really um, to use that old adage is that ounce of prevention's worth a pound of cure, right? So you don't want to have any challenges when you're going through the home purchase um, process and after you write the offer, because you don't get a lot of time to get your financing in place, and you also don't really get a second chance in many other cases. cases. Like there's usually backup offers these days in this really hot real estate market that we're experiencing.
Awesome. So thanks for that. But I want to actually talk a little bit more about the rate hold that we spoke about in episode 1. So when I hear, I'm a borrower and I hear that I need to get a pre-approval, I am assuming that a pre-approval means I'm going to know how much I qualify for and I'm going to get a rate. But that didn't sound like the case when we were talking about it in episode 1. It sounded like we were kind of talking about those as two separate things. So is that the case, Colton? Is a pre-approval always going to give me a rate, or is a rate hold completely different and a pre-approval is literally just an amount?
So it really depends, right? It depends on the market first and foremost. If rates are increasing or we believe they're going to increase, then we do lock you into it, right? Because we don't want the rates increasing, and it's obviously going to affect your purchasing power. And you don't want a higher rate, obviously. So in the market that we're in as of right now, rates would seem to be decreasing and slowly, but they're decreasing, right? So in this instance, we don't find it important to, or I should say, as important to lock you into a rate because if we lock you in at say 4% today and rates drop to 3.8, we'll just say, then that pre-approval getting it sent in to a lender, like Peter was mentioning earlier, it's work up front for them, and it's kind of needless in the end because maybe a different lender is giving a better rate or there's a special. So we kind of just waited or wasted said lender's time, like a lender there, when we're going to the B lender and A to B. It's just a waste of time for us. It's a waste of time for you. It's a waste of time for the lender. So in this instance, we wouldn't submit your file to a lender for a rate hold. So our pre-approvals are essentially just here's the rate as of today. On top of that for you, and we'll talk, right? We'll talk with the client throughout, and we'll even ask sometimes, like, do you want us to lock this rate in to be safe? And if not, it's kind of your judgment call. We'll talk about it, and then we kind of proceed accordingly.
Okay, so you're basically what you're saying is that there are actually pros and cons to locking in a rate at a pre-approval stage. And I'll just kind of point out one of the cons of actually locking in a rate at pre-approval stage. If you lock in a rate at a specific lender, and then down the road, like you said, Colton, let's say they have a special, like a promotional deal going on later on down the road. The client doesn't actually qualify for that all of a sudden because they have a locked in rate already. Now they don't qualify for the special, and we'd have to get you
Flip it
just the
somewhere
regular
else.
rate or flip it to a different lender,
Yeah,
right? Yeah. Yeah, which is again, like you said, kind of a waste of time.
yeah. So
Okay.
we need to be mindful of all that, right?
Right, right, right. So we also talked about a little bit about the financing condition in episode 1. But if I'm new, I'm a brand new borrower, and I don't even know what a financing condition is. So, Peter, can you kind of talk about the process? Like I'm pre-approved. I know that once I got my pre-approval, it's time to start looking at houses, right? When I find a house, what is the next step? And I know this is a good conversation for borrowers to have with their realtor as well, but just from a mortgage broker's point of view, can you kind of go over that for the new borrower who doesn't know what it's even like to write an offer? Oh, you're muted.
The offer to purchase is a contract, and the contract's between the seller and the purchaser. So in that contract, there's going to be conditions that favor the purchaser and conditions that favor the seller. And the financing condition is something that's going to favor the purchaser. So that's going to give you a certain amount of time to make sure that you can formally apply with your pre-approval, hopefully to the lender. And this part of the application is getting the lender on board to make sure that they're satisfied with all the documents that we collected, but more importantly, that they are that they will approve or fund the mortgage on the property that you're buying. Just because you like the property doesn't mean there's a defect that would prevent the lender from actually funding the mortgage. And what might not be a big deal for you, because maybe you know how to do, you're handy or know how to do a lot of stuff, could be a big deal for the lender. And the other thing about this financing condition is just because you think and write an offer of $400,000 on the house, the lender may disagree and think it's only worth 350. So that financing condition is going to allow you to make sure that all your documents are in order, that the lender agrees on the house and agrees to the value that you've agreed to pay to the seller. Is that a good explanation? I think so.
I think that's a really good explanation. So when I write an offer to purchase on a home, there's going to be a financing condition. I'm going to discuss that with my realtor on, how long the financing condition needs to be. Maybe also discuss it with my mortgage broker, how long they need for that as well. What is the next step after that? Like what happens when everything's good? We got the financing condition completed, we're approved. Colton, what's the next step after that?
Yeah, so once we have all your documents and we've submitted to the lender, submitted your file to the lender, and we're good to go on that financing condition within the 3 window stage, or the 3 days, we'll just say, for a vague number of financing days. You're done on our end, right? And then your file gets shipped off to the lawyer, and they kind of take it from there. They'll collect your money. They will go over all the documents that they need to, so all the disclosures, our commitment again with the lender, house insurance, title insurance. You'll also have to provide closing costs, which are not often discussed with clients we've been finding, where it's typically 2 to 3% of the purchase price, right? Which is a big lump sum of money that sometimes clients aren't expecting. So we like to go over that as well with our clients to ensure that they have the required information, and so they can comfortably, give the lawyer X amount of dollars to close this transaction.
Can I just jump in there with one other little point? Just
Please.
because we've satisfied your financing condition, that doesn't necessarily mean you're finally approved. You, as the borrower, can still go mess up your pre-approval, and things you can do to do that are maybe going and buying a new car with a really big monthly payment. Maybe you accidentally, or I don't know how you do this, but it's happened, spend all the money you have for your down payment. Maybe you go and then quit your job or start a new job or reduce your hours at your job. There's things that you can do after we finally approved you before the possession date that could prevent the lender from funding your mortgage. So it's important to understand what not to do after your mortgage is final approved, because there are ways you can mess it up.
That's a great point, and that was actually my next question, so thanks for
Oh.
jumping into that. But a follow-up question to that would be, one sec. Sorry about that. A follow-up question to that would be, is like if I do nothing different, is it possible for the lender to then come back after giving an approval and say, just kidding, you're declined now?
Possible, but unlikely. So the lender can do what they call pre or post funding audit reviews, and they can see and make sure that we did our job as brokers, that the underwriter who works for the lender did their job, or the person verifying the documents for the lender did their job. So it is possible, but highly unlikely in our office. Like, I don't remember that ever happening to me ever, but I have heard of it happening to other people in the industry.
Okay, that's good to know. Did you guys have any kind of closing thoughts before we wrap it up for today's episode?
I don't think
All
so.
good?
No. Yeah, just be prepared. Ask the questions. Get the
Yeah,
information, right?
be
All right.
prepared.
Yeah,
Understand
be
everything
prepared.
up front. Like just get it all done up front. There's nothing worse for a client to go through the stress of writing an offer and being unprepared. Like it's like taking a drink of water from the fire hydrant. Like there's just so much to know. But if we go through the process up front and you're comfortable and all your questions are answered, then it's a very positive and smooth experience and not a bone of contention or stress for our client.
Absolutely. So I just want to say that this video is not to be taken as mortgage advice. If you want specific mortgage advice for your specific situation, please reach out to a mortgage professional. If you want that to be one of us, please reach out to us at 431-482-2187 or at our email address, greatrates@mainstreammortgages.com. Thank you so much for listening to this episode, and we'll see you on the next one.
Thank you.